Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 13th of August 2023 and this is our regular weekly update, a repeat of the video we produced yesterday with just a different heading and some captions. Last week we saw gold and silver prices fall, even though CPI data, inflation data, came in as expected. This surprised many traders, and particularly those who are of the opinion that interest rates may now have peaked. We suggest that that may not be the case, and in fact, we believe that there will be another interest rate increase before the end of 2023. So, why did prices fall? Let's take a look. Now, before we go into the detail, just a quick reminder, we've set up a second channel entitled Finances Do Matter, with over 140 videos and producing around 5 a week, covering a whole array of financial topics. We've placed the link in the description box and comment section below for those who have not yet joined that channel. Also yesterday, we produced a video on the CPI figures and the market reaction entitled Surprising Twist. Positive CPI data fails to lift precious metal prices. And we've placed a link to that video below. Now, meanwhile, going back to what happened last week and what we expect to happen this coming week, gold fell $29, falling from $1,943 to $1,914, having hit a high of $1,947 and a low of $1,911, a fall of 1.5%. In sterling terms, it finished the week at £1,508. That's down £18. And in euros, gold closed at €1,749. That's down €18. Now, silver performed worse. It fell 95 cents, falling from $23.65 to $22.70, having been as high as $23.70 and as low as $22.59, a fall of 4%. In sterling terms, silver closed at £17.89. That's down 68 pence on the week. And in euros, it closed at 20.74 euros. That's down 0.77 euros on the week. Obviously, because of the worsening performance of silver, the gold to silver ratio rose. And it's risen from 82.2 to 1 to 84.3 to 1. The difference between gold's high and low for the week was $36. And the difference between silver's high and low was $1.11. So not a great deal of oscillation, really. Now, this is what we said last week concerning our forecast. We expect gold to trade between 1900 and 2000, but felt it would struggle beyond 1980. And it actually ended up trading within the lower half of that projection. In other words, between 1900 and 1950. We forecast silver to trade between 2250 and 25, which it did quite comfortably. Again, perhaps towards the lower half of that range. Looking at other financials, Bitcoin stands at $29,398. That's up $384 on the week. Equities were mixed, really, with the Dow Jones up 216 points at 35,281. The S&P down 14 at 4,464. The Nasdaq down 265 at 13,644. And the FTSE 100 index down 40 points at 7,524. Oils were higher, but admittedly very marginally. Brent crude closed at $86.58, that's up 34 cents. And WTI crude closed at $83.19, that's up just 37 cents. As we've stated many times before, if we really want to see serious impact on inflation, we've really got to get that oil price closer to $70. Preferably lower, but certainly down to that figure. The dollar index stands at 102.85. That's up almost 0.85 points on the week. Now, in terms of economic data last week, consumer credit for June came in at $17.8 billion. Almost $8 billion more than forecast. So there's some borrowing going on here. Initial jobless claims rose to 248,000, some 17,000 more than expected. But the CPI figures, which were the most important piece of information published last week, came in almost exactly as predicted, with both CPI and core CPI rising by 0.2% for July. meaning that year on year we have CPI at 3.2% compared with 3.3% and core CPI at 4.7%. Then on Friday we had the US Producer Price Index, and that rose by 0.3% in July compared with the market forecast of 0.2%. Now, when the CPI figures were announced, we did see a slight uptick in precious metal prices as traders began ruminating that there'll be no interest rate rise in September thanks to inflation holding steady. However, a few comments made by Fed Reserve personnel did seem to suggest that although there may be no need for a rise in September, an additional 25 basis points may still be required before the end of the year. Now, the video we produced yesterday highlighted some of those who commented, so it's worth clicking on that link. Now, there are further CPI figures to be announced before the Fed has to make that decision on interest rates, which will be on the 20th of September. And there will also be PCE figures, another inflation measure, both of which will be watched very closely. Now, this coming week, we have US retail sales on Tuesday for July, with economists forecasting growth of 0.4%. We also have the import price index the same day. Then on Wednesday, we have the FOMC minutes, which will be read closely by analysts, though I suspect nothing particularly out of the ordinary will be discovered. Thursday, as always, the initial jobless claims, but we'll also have the US leading economics indicator for July, with nothing scheduled for Friday. So, really, all eyes will be on Tuesday's retail sales, and thereafter we're anticipating a quiet week. In fact, with little to be announced the week after, we're anticipating an uneventful remainder to August, with prices potentially drifting lower unless something happens on the geopolitical front. From a technical analysis point of view, gold does look like it's attempting to head for the 50-week EMA at and around the 1900 mark, which previously has offered reasonable support. Our analysis indicated there is extremely strong support at $1,800, and should $1,900 be breached, we cannot envisage a downside of more than $100. Once the August malaise is over, and when we're confident interest rates have peaked, providing they do, then we shall start to see a resurgence in gold, back to the upside. Silver's toying with support at $22.50, and should this be breached this week, which is indeed possible, then it may be attracted towards its 200-week EMA at $22. This is seen by many as its natural floor, and should those forecasts be proven wrong, and silver falls below that level, then you cannot rule out that $20 solid floor previously highlighted. We call it the granite floor of silver, as there would have to be incredibly exceptional circumstances to see silver dip below $20 again. Now, we suspect, though, that silver is going to alternate broadly over the next few weeks or oscillate between $20 and $25, likely to spend most of the time within the mid-range of that forecast. So, next week, we're putting ourselves on the line and saying we're expecting gold to trade between 1880 and 1950, with 1850 and 1975 as outliers. Silver, we believe, will oscillate between 22 and 24, with 21 to 24.50 as outliers. Clearly, you can see we're now moving slightly towards the lower end rather than the upper end of expectations. What do you think? Please share your thoughts. Thank you for listening. Please, we'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign. We wish you a very safe, enjoyable weekend, and as always, a prosperous week ahead.